Most drivers think that the biggest car insurance mistake is paying too much, but insurance companies say the biggest mistake is completely different, and it usually doesn't show up until after there's an accident. So let's break down the mistakes that drivers say that they make and the ones that insurance companies actually see every day. Number one, according to Policy Genius, that 42% of the average consumer doesn't fully understand their car insurance policy. And I get it. If I wasn't in this industry, I probably wouldn't know it either. It's just focused on getting the best price. But a lot of people don't realize that having the best price is giving up some of the coverage. And think of it as a safety net. Whenever you fall off a trampoline or fall off something and something catches you, that safety net in insurance can either be made out of twine, which is cheap and inexpensive and get you by and through the day, but it's not going to hold you if something major happens, versus having a safety net that's made out of a real thick rope or a real thick, strong safety net, then it's going to protect you correctly. So if your future income or your future jobs and all of the things that you're working towards is important, then having the right coverage within balance of the price is going to matter the most. And that's where we find most people fall flat. And unfortunately, most agents, or a handful of agents, are giving the wrong advice. Today, the industry is known for making money, and it's all about fear, and you're afraid of this and afraid of that, so you're going to buy these coverages. But most agents are just trying to get the sale, especially in a competitive market where it is right now. All the prices have not gone up, so not a ton of people, as many, are shopping as they were a year ago. So now these companies are struggling to get the clients, and they're undercutting coverages, and they're lowering the price to get your attention, to get you to purchase a policy. So make sure that when you are purchasing a policy that you are debating whether state minimums is the right fit for you. They're still there for a reason. They are a fit for some people. It's affordability and the coverage that you need to protect you, versus if it's not the right coverage for you. Most companies and most people recommend kind of that middle ground, where sometimes even doing the higher end coverage isn't much more of a cost. And you are evaluating those. That's something that an agent's going to take into consideration. They're going to look at those options. How much of a difference is the state minimums versus how much of the difference is having better coverage? Sometimes you'd be shocked, in some states, it's not a ton of money. When you are upgrading your coverages, you might only be paying a couple dollars a month extra to have that bigger, better safety net than that person just trying to get to the cheapest thing. I'll be honest, the secret to our agency when we sell insurance is we find those gaps. We look at your policy and we're like, oh my gosh, you're not covered for this, that, and the other. And then when we come in more competitive, we're cheaper, and we gave you all those coverages, that's a no-brainer. Like, why wouldn't you switch to someone that, one, isn't just undercutting the price, chop the price down just to get you in the door? Because knowing what discounts and coverages mix together, that's where a good agent is going to understand it even more. Now, it's very rare even to teach because it takes years of practice, but the agent that's willing to have the conversation and explain, this is going to be more expensive, or this is a bigger coverage for the right person, the person that needs that safety net in a lot of the occurrences that could potentially happen, is to protect them better. It's not always the case, but there are probably, I'd say, a fifth of the time or 20% of the time, you're going to see sometimes that policy is going to be more expensive to have the right coverage. But that's where you get to make the decision and decide whether it's worth it. So if you've ever been on a phone call and the agent says, hey, here's what I recommend, here's why I recommend it, not just to make an extra commission, but more so to get you properly connected or properly covered in case of a major occurrence. At the end of the process, you get to decide that, whether it's worth having or not worth having. That's the choice that you get to make. By the way, if you are shopping for new insurance and you want an agent like that, I'll put a link in the description below where you can do a quote and get connected with an agent. Usually the agents that I recommend are independent, and they're allowed to shop across multiple companies. So they're checking Liberty Mutual, they're checking Travelers, they're checking Nationwide, they're checking your Safecos, your Progressive, your Geico's. They have the access to check those prices to not only get you the better coverage, but also try to get the best pricing for the company that's the best fit for you. And that leads me into the number two, which is kind of the opposite of what we just talked about, is the mistake that people make most often is they don't shop enough. It's a catch-22 because I hate it when customers shop. Somewhat, but I also don't hate it when they do shop at the right time. So there's timing to shopping. When you're shopping for insurance, if you've been with a company and you're brand new, you're 6 months in, you're a year in, maybe 2 years in, it's first feelings is if you don't feel like you have the right coverage, then either way you should talk to a different agent and start shopping then. But the year 3 and year 5 marker are the 2 years that make the most impact. So from a financial standpoint, just looking at how much money you can save is if you're 3 years or 5 years, there's what's called a loyalty discount or a long-term customer discount, where companies that are the better fits for certain people give discounts because they know that you're going to stay with them for 3 to 5 years and they want that type of business. Just to back that up, I love stats. I'm a stat guy. Sorry, I know that's the boring part of videos, but according to JD Power, that 1 in every 3 drivers shop every year, which to me is kind of almost too much. If you're not shopping, you've been with a company for 7 to 10 years, 1, talk to the agent that you trust first. If not, go on the description below, fill out the quote, and work with somebody that can shop that if you've been 6+ years with a company. Mark, why would I do that? I've got the great rate. The average cost, and I've actually had some people have saved thousands of dollars, but the average savings is $300 to $600 per year. So when you are shopping, and price does matter, especially with the gas prices like they are now, it does make an impact. So having $300 to $600 per year less is going to be impactful, especially if you can get the same or better coverage with as good or a better company. The third common mistake that people make is choosing the wrong deductible. Their deductibles honestly should be going up. I commonly quote people $500, but I'm on that edge of whether I should start leaning towards $1,000, mainly because the cost of $1 isn't worth what it was when we started. $500 is nice out of pocket. It's less you have to pay if you have a claim. But if you can afford $1,000, it's going to lower the monthly cost. And in a lot of cases, it's starting to make as big of an impact to where it's going to actually save you more over that year to 3-year period, where if you only had one accident in that 3 to 5 year plan, then you're likely going to have less that you've paid out of pocket to have the large deductible. Keep in mind that deductible is what you're paying out of pocket. So if you don't have access to $1,000, you may want to think of having a lower deductible. Stat time, $500 to $1,000 deductible will save about 15 to 30%, depending on the state and the company that you're insured with. Number 4 is forgetting discounts. And this is something you should probably never remember, to be honest with you. So there's a 25% of savings that a lot of people are missing out on. I think it's 10 to 40% possible discounts if you're doing the telematics, if you're willing to give up some data. There's the good driver discounts, the low mileage discounts. I've got a ton of videos I'll link at the end here that helps you with those discount pieces. The bigger piece is the agent should know which discounts are the best fit for you. Those are the questions that they're going to start asking to help get the pricing down, to help get that available coverage for the lowest cost. 50% of the people miss a discount. So if you're doing it online yourself, that's why agents can be cheaper versus thinking you're cutting out the commission. Honestly, the company usually pocket the commission anyways. So when you're going online, sometimes it's 3 to 7% cheaper to do it yourself. Other times it's actually cheaper to have the agent. And if they can find extra discounts, then you might as well just go through the agent anyway. I get it. Having insurance is one of the most hated things out there. People don't like to have to pay, especially when you do. Other people see it as a huge benefit. That safety net is there to protect me. And if you have the income to pay for that, then it makes sense to have that in case something major happens. But what happens most often is people, like taxes, they do the taxes and they shove them in a drawer and never want to think about it again until it's time to actually use them. And if it's time to use them, that's where that safety net is going to come in, because this is not an investment. You're not trying to win or gain a profit out of this. You're trying to make sure that you never have to use it, but also you're not overpaying as well. That's where a lot of people start to get a little bit lax and they forget that they have insurance. And when that happens, one of the bigger common mistakes is mistake number 5, is they let their insurance coverage lapse. Especially if you're single, you have one car, you're thinking of selling it, or you're thinking of switching vehicles and there's a 2-day gap in between, or you've sold it or something happened and it broke down. Well, the first thought is cancel my insurance. I don't want to pay that extra money, but technically you're paying per day. So when you're paying per day, yes, you're losing the money that you're spending per day on that monthly payment. But if you have a gap or have a lapse, when you're starting over, that risk profile that they've created for you has increased because you don't have insurance if you've canceled it, and that's a higher risk for insurance companies. That can cost you 30, 40, sometimes 50% more, depending on the state that you live in. And that was the fear part. I said 30, 40%. Technically, the stats are 9 to 20%. So if you want the real number, 9 to 20% is the increased payment if you don't have insurance versus having insurance. It's a little different if you haven't had a vehicle. So if there's a reason behind it, sometimes the agent can find a company that accepts that as an excuse. So they can say, hey, no vehicle, no insurance, makes sense. We're not going to do the 20%. It might be 9 or 10% more to start the policy, and then after 6 months, we'll give them that credit. Now, that's what most common is with people. What the most common with insurance companies is carrying their liability limits way too low. We mentioned it in the first part, but that was what the average mistake that people are making in general and that they say they're making. The most common in insurance companies is just the liability portion. The liability, in my opinion, is the most important piece of an insurance policy. I'll link a video that goes over the actual coverages that you should be carrying at the end. In either case, you want to make sure that you have the right liability limits because that's your future, that's your income, that's your high medical if you injure somebody. If someone's going to go after you, it's what you're liable for to pay is what you want to carry on insurance. So at the end of the day, the insurance needs to look like they have more money than you do in your bank account or than you do in assets. So if you own a home and it's positive, net positive in income, or if you have a large income, you're a doctor, you're a nurse, you have a decent income to protect, you want to carry enough liability limits so that if you somehow make a mistake, you drop the pen, you pick it up, you realize there's a car there, bam, you hit them, they're injured, their neck hurts, they could have long-term disability. All of those pieces play a factor, and having the right liability limits is going to make a huge difference for you specifically. I personally see that because, again, liability also is a big impact on the price. So when those agents are undercutting those prices and they're trying to make them cheaper, that means that you're going to pay less, but you gave up liability coverage. There's other things that I've seen happen in general, but that's the biggest impact you're going to see with the right company. Well, Mark, I don't want to click on your other video at the end and just tell me what liability limits I should carry. Well, in most states, you're going to find that their minimums are $25,000 per person. Usually in almost every scenario, never enough. So if you're trying to have the right coverage, that's usually not the right coverage for just about anybody. The common that we used to talk about 3 years ago was 100,000 per person. It's called 100-300. That's 100 per person, 300,000 per accident. So if there's multiple people injured, it maxed out at 100 each person and 300 total. That's starting to become, again, the money's worth less. So it's starting to become the actual just below average coverage. Nowadays, you're looking at 250, 500, and it can go beyond that. The second that companies say is a big problem that people are having with insurance is not having uninsured or underinsured motorists on their policy. It's tough to say because in my home state of Michigan, they don't really have a big price change on it, so everybody gets it. For $12 a year, you can have uninsured and underinsured motorists, mainly because we have medical that you have to carry. In almost every other state besides Michigan, there's not a requirement to have the uninsured bodily injury. And that uninsured bodily injury is medical for you or people in your car in case someone hit you and didn't have insurance. Hit and run. They injured you and they just forgot that they didn't have insurance. Even the wealthiest person could accidentally forget a payment and the policy could have lapsed. They have an accident, you're injured. Now you have to sue them just to get paid for your medical. If you already have the coverage, you don't have to delay. It can be paid directly and you can have those payments pay for that medical so your income isn't damaged or your credit isn't damaged in that scenario. Yes, I get it. You can go after the other person unless it's hit and run. Then there's no person to go after. But in those cases, that's the uninsured motorist. There's also underinsured motorist, which is someone that just doesn't carry a ton. We talked about state minimums. If somebody carried the state minimums, that's not enough coverage for somebody that needs more coverage in a medical claim, or if their car was damaged, uninsured or underinsured property damage. I don't want to get too weeded out in the coverages. Well, like I said, I'll link a video that gets a little bit easier to understand. But in general, they're saying that that coverage is one of the most common missed coverages on your insurance policy. The average uninsured motorist inside the United States is 14%. So if there's 10 accidents, there's about a 1 in 10, a little bit more than that, chance that that person doesn't actually have insurance. It's the gas prices, the cost of living, all those things is increased so much that some people aren't carrying insurance. And again, we put it under the rug and don't want to look at it again. So some of those policies have canceled by accident and people just don't realize that they're not insured. But number 3 is the filing claims portion. And I completely agree with this. You're going to hate me and I want comments below telling me why I'm wrong or right. But filing a small claim in a lot of cases can hurt you long term. Think of a state like Texas or Tennessee where they charge not at fault claims against you. So having a tiny claim where you have $1,000 deductible and it's a $1,500 repair, so you netted $500 to get your car fixed, and now that claim comes back at a 10% or a 12% increase on your current policy. That don't count not at fault claims against you. They can after a certain number. So if you've had a not at fault claim, but you have another one, usually the state will allow them to say, oh great, if there's 2 or more, we're allowing you to raise the risk profile of that customer because there's a good chance if you've had 2, you're gonna have 3. And if you've gotten 100 here, 500 here, 1,000 there, that's a little bit different than if you had a major $10,000 claim. In those cases, they're gonna count that against you at some level, so be a little bit careful. That's why if you can't afford it, having accident forgiveness on your policy is going to help, because if you do have an accident, it's your fault, then they can waive it off of the policy in general. Number 4, common, and I agree with this one as well, is not updating your policy for life events. That's one of the main reasons you should shop or at least talk to your agent if you're moving, if you're adding drivers, if you have a new commute and you think you're going to drive more. There's nothing worse than getting a mileage verification from the insurance and finding out that you have to pay more. Some people just ignore that one, so technically they're not going to find out until they require it. But again, you don't want to be dishonest if possible. And then if you're going to use the vehicle for any type of business use, it usually is allowed. It just depends on the scenario. If it's a commercial use, then obviously it's going to have a commercial policy, versus if you're just picking up something from a local store to bring to a job site. Usually insurances allow that, but there's a little bit extra cost because it's going to be considered business use. And I'm going to skip number 5 because this is kind of a frustration with me personally, is misreporting mileage. Not that so much as the garaging addresses. The secret's out. Like if you live in one zip code versus another, it could be cheaper. The location, the amount of claims that you have in a specific zip code or an area. Nowadays they're called clusters or they're called territories. So usually it's a bunch of zip codes mixed into one. And sometimes there's a border. The guy across the street or girl across the street might be paying less than you are, not because they're a better driver, just because they're in a lower risk area. And that feels unfair. So a lot of people try to cheat the system and say, nope, I live at this zip code and that's my address. Insurances will figure that out because everything's okay until there is a claim. Remember, this is a safety net. Do you want to punch holes in your safety net and have possibilities of it ripping open when you need it to catch you? If that happens and they pull your license and they pull the registration and they're like, hey, wait a minute, this isn't where you live. They might let you go years of having the policy, pay the whole bill, and then they deny the claim at the end of the process because you're the one that lied to them and it's all written into stone. When you sign off that paperwork, you're saying, I agree, these are all correct answers, these are all things, these are legit. I have to tell you if things change. All those pieces, it's kind of almost a little bit of defrauding the insurance company. It's called rate evasion. And that is a common thing for people to do because they want to save some extra money. That's a lot. The number 1, the biggest common issue with insurance, the most common mistake that people make, is they think that insurance should be based on price. Oh my gosh, he said it. Oh my gosh, he said it. Never trust him. It should be on price. Let me know in the comments below if you agree or disagree. The risk protection, if you have ever seen major claims, seen policies denied, look at the news and see people getting sued for lying on policies, those are massive and they can impact your entire life or the overall quality of your life because of finances. Yes, money doesn't make you happy, but it can pay for things that can make, it's like having the choices is huge. And thinking of insurance as a cheap route to go can impact you if you're the small percentage. This should not be about fear, even though that is the fear for me. I don't want that 1% to be me, to where if I have a claim and it's $500,000 medical or my kid's injured and is in a coma, God forbid that ever happen, but I don't want that to be the scenario. And I'll probably never have that happen because I'm one of the best drivers I've ever met, speeding wise and swerving wise. So I'm really good at aggressiveness. But at the end of that day, I don't want to be the one that's in the hospital wondering, how am I going to pay these bills? I want to know that that safety net caught me. I might be injured and I might have a lower quality of life, but it's a lot better than having that and then having nothing to protect me or back me up at the end of it. Let me know what your thoughts are. Am I completely crazy? Do you think that that should be changed? Do you think insurance companies in this group is just kind of that scam piece? It is. I get it. The comment. Let me know what your thoughts are. I promised I would give you 2 videos. 1, discounts that are going to help you get the best pricing. If you don't understand your policy, more importantly, the Insurance 101 that's going to go over the coverages you should look at. I'm Mark with Think Insurance. I'll see you in the next one.